Hi there, everyone. I think that we can go ahead and make a start to the webinar. To those in the technical area, please do stop me if I'm talking to no one, but hopefully people will be with us and joining in the chat shortly. So thank you so much for joining us. Welcome to the webinar, Tracking Down Tax Dodgers and Kleptocrats, the Case for UK Corporate Ownership Transparency. My name is Peter Munro. I'm from the UK Anti-Corruption Coalition. I'll be chairing our event today. Now, this is one of many organised for Fair Tax Week 2023, which runs from the 8th to the 18th of June, and is the initiative by the Fair Tax Foundation that recognises the businesses and organisations that are proud to promote responsible tax conduct. It's also a celebration of the positive contribution this makes to society, a huge array of public services it helps to fund, from education, health and social care to flood defence, roads and policing and so on. This is not the only event that's happening this week, so to find out more about Fair Tax Week and what else is happening, please see fairtaxmark.net. So Fair Tax Week is not only an opportunity to explore those issues that I just mentioned, but we can explore related issues such as beneficial ownership transparency, as we are doing today. And the UK Anti-Corruption Coalition that I'm part of is delighted to be partnering with our friends Fair Tax Foundation for this morning's event. For those of you who don't know, I'll just show a quick line on the UK Anti-Corruption Coalition. We're a coalition of like-minded NGOs and academics who lead in the anti-corruption space, focusing on topics ranging from public procurement to political standards to corruption in the extractives industry and beyond. But as I say, today we're talking about beneficial ownership transparency. I'd like to take just a moment to introduce our panel. Roland Papp, Senior Policy Officer on Illicit Financial Flows at Transparency International EU. Graham Barrow, Director of the Dark Money Files. Timon Keep, Head of Policy and Research at Open Ownership. And finally, Mary Patel, Networks Manager at Fair Tax Foundation. So we're going to go straight to our panelists in just a second, and we'll have about 15-20 minutes towards the end for any questions that I believe can be put in the chat. And before I come to our first panelist, Roland, I would just like to outline a few things that, there's been some disappointing developments in the European Union regarding public access to beneficial ownership. Roland Papp joined, and Roland's just going to go over that right now. Roland Papp joined Transparency EU as Senior Policy Officer working on illicit financial flows. Previously, he's worked in the European Parliament on budgetary control, anti-corruption and foreign affairs in MEP offices, and has also worked on anti-corruption issues and social policy in Budapest. Roland, can I pass over to you, please?
Good morning. Thank you very much. And thank you very much for the invitation. I hope you can hear and see me well. So I would like to first start with a story about a rich Slovak businessman who became one of the richest person in Czech Republic and then decided to go to politics. Once he entered politics, he said that he claimed that he could put aside his private wealth into trust and then he had nothing to do with it anymore. You may have heard of him. His name is Andrej Babiš. And it turned out when he was already Prime Minister of Czech Republic that some of my colleagues who were based in Czech Republic in Transparency International Czechia, that when they look into databases in Slovakia, they found that indeed Babiš was still the beneficial owner of the trusts he's supposed to have no connections with. This was a huge problem because this man, he was voting and making policies about EU agricultural subsidies. At the same time, those trusts and companies he was still controlling actually benefited from those very policies, which was a serious problem of conflict of interest. And it took the European Commission roughly 2-3 years, finally could come to the conclusion that indeed this was a problem and it shouldn't have happened. Now, we all know about this whole problem because there was access to these beneficial ownership information in Slovakia. These companies and trusts he controlled still had a lot of assets in Czechia and Germany, yet we didn't know about those because the lack of the proper data and lack of transparency in this beneficial ownership information. So this is a huge problem for a number of reasons. I mean, all people in this panel and the audience very well, the problems about tax, but I wanted to say this example because it really goes beyond the basics. It is really about our democracy and our trust in society. As you probably know very well, anti-money laundering rules are basically made sure that we know whose money is in our financial systems. The so-called obliged entities are the main gatekeepers, financial institutions, as well as other kind of non-financial obliged entities such as lawyers, notaries, and so on and so forth. And so in the European Union, there was already a very good direction to go to this system where you have access to the information, that people can look up who is controlling, who is owning an entity. And this was in the framework of the anti-money laundering directive, the fifth one, so-called directive, up until recently, when another rich businessman, this time from Luxembourg, went first to the court in Luxembourg, which then went to the European Court of Justice, and basically said that it's a huge risk that his information of what he's actually controlling is publicly available to everyone. The lawyers claim that it, risk kidnapping, because, that's the only way how you know about a person that he or she is rich, to look up in the beneficial ownership registry. Unfortunately, these arguments and the whole system convinced the judges that indeed this kind of bland open access to the data about beneficial ownership is not in line with our privacy rules. Therefore, they said these beneficial ownership registries, which were ineffective in all 27 member states, as I mentioned, with a lot of problems, they had to shut down to the public. Now, they still kept it open for obliged entities, but basically what I've seen is the result that many countries shut down for the public. Some kept it open, such as Estonia, Latvia, or Denmark. Some are trying to figure out some ways how to make it sure that it functions in certain way. It's important to know that those obliged entities, so banks and lawyers, tax auditors, they still have access to their own beneficial ownership registry, not to the public. However, the judgment also said that people who have a legitimate interest to get this access, such as journalists and NGOs, or journalists or NGOs, because they have an important role to play in fight against money laundering, they should still get to this access, and they should really, for their own work, they need to get this information. Now, how to solve this? This decision came in, it was a bad decision from our perspective, and we really think that this really harms, in general, our information, access to information. It really has many bad consequences. At the same time, this bad decision came in a rather good timing, because the European Union was working on a new set of framework for anti-money laundering rules. You probably know that the EU is a very slow and gigantic bureaucratic set of institutions when they are making up different rules. So they were making this new package, which was going to set up a new anti-money laundering directive, the sixth one, and also new regulation. Now, bottom line, for those who don't work too much on EU things, there are two types of main legal acts in the EU: directive, which then has to be transposed, and all the 27, now unfortunately only just 27, I must say, countries need to do their own, transpose it to their own national systems, and there are regulations which are directly applicable. So I'm sure you all have heard about GDPR. This is a regulation. Therefore, there is no specific German or Latvian or Irish GDPR. There is one GDPR. And then there are the directives where you transpose. So now what the EU is trying to do, and try to do even before the court ruling, they started this procedure in 2021 to have a new directive to clarify a lot of things, then have a regulation which will make that all obliged entities have the same type of tasks when it comes to customer due diligence, how they identify the beneficial owners, for example. It should be in the same set of rules all around the 27 member states. They're also going to set up a new anti-money laundering authority, which is in the making, which will have certain coordination rules as well as supervising some entities. And so why I'm saying is that it's a good time for this bad ruling is because now at least we can try to fix it somehow, and we make sure that in this new directive, we will make sure that at least some people will have access. We believe that the court decision said that those journalists and NGOs have a legitimate interest. They should not specifically demonstrate that they have a legitimate interest. They need to demonstrate that they are the people who are in this category of entities, of journalists or NGOs, or actually also other businesses who want to do business with other entities and look up information about them. So in our understanding, at this stage, the European Parliament and the Council, so the two co-legislators, the Council is made up of the national government's representatives. They try to come together. They're now together in this process of negotiations to finalize the text, which will be the new directive. And in our understanding, what we need to make sure is that indeed this new tax is in line with the ECJ ruling. So we are not going against the ruling, but we still want to make sure that people who have access, who should have access to this beneficial ownership information, still can get this information. Two more words about the modalities of what does it mean. Okay, you are a journalist, say, you understanding, and this is broadly in line with the parliament's position. If you demonstrate that you're a journalist working on certain topics, you essentially have a legitimate interest in getting access and information to look into the beneficial ownership information. Then what you should have is, once you're accepted, you should get an access to the whole registry, not on a case-by-case basis, because we've seen before when in certain member states there was a certain structure that you couldn't just look up something in a register. You need to ask one by one specifically. This was burdensome. This was very, very hard to do proper research, proper collecting information, and so on. Also, many times you just see trends, for example, if you really have a bulk data and you can work with the data sets. And that is, I think, very important to really enhance our knowledge on these topics. Then also it's important that if once you get an access in one member state, ideally you should be treated as such in all 27 member states. So you should have access to those registers in other countries. And if you're a Latvian journalist, Latvian authorities said that, like, yes, indeed you are a journalist, but then you want to look into some, I don't know, Portuguese entity which is registered in Portugal. It is probably much easier for the Portuguese to say, like, well, Latvians understand that you're a journalist. I don't want to get all the paperwork in Latvian about your work. Please feel free to go. Access. Here you are. I think this would be much better and much easier for everyone. And also just one thing, as I mentioned, it is not only strictly about anti-money laundering, it is and terrorist financing. It is a much broader sense of the so-called predicate offenses, where people, for example, how they make money then they launder through anti-money laundering, through money laundering acts. So, for example, environmental crime, illegal fishing. Many of these topics, what we've seen is that the crimes are committed in a way that those people who are doing that, they want to hide their identities. So they are setting up all these shell companies in different tax havens, and then this trust which owns another trust, and so on and so forth, and these very complicated legal structures, and they try to hide it. So actually, activists, NGOs, people working, and also not to mention tax, those people who really want to go after those criminals who are committing these kind of crimes, they should also get access to this information, because it's a very important and valuable point for their work. So these are my first points, and the point is that right now the two institutions are negotiating. They had their specific position. Now these are the two options we have on the table. Both of them have some wording about this legitimate interest, and that indeed some people should have access to these registers, and now are in the process probably until autumn. At some point when they will need to figure out and finalize some wording, latest early next year before the European Parliament elections, the institutions need to come to some agreement. And if you have any questions, I'm happy to answer. Thank you very much.
Thank you so much, Roland. Really interesting stuff, and really important to know that some countries have kept open registers, and the change of the legitimate interests as well, which is really important. I would just like to remind people that people can submit questions via the Q&A, not the chat, as I think I probably initially mentioned, but please do send questions to the Q&A. I would like to take this moment to introduce our next panelist, Graham Barrow, Director of the Dark Money Files. Graham has worked in financial services for the past 25 years, latterly providing subject matter expertise in respect of global financial crime, as well as providing in-depth research on UK company formations. He's become well known as one half of the Dark Money Files podcast. Graham seeks to raise awareness of the close links between financial crime, organised crime, criminal gangs, corrupt individuals who are responsible for the dirty money entering the financial system, most particularly with respect to the UK companies, which are often at their heart. Graham, if I could please turn to you to discuss your mission and work in a bit more detail. And it would be great to hear about the UK's beneficial ownership register and some real life examples of its importance.
Excellent. Peter, thank you. And thank you for inviting me today. So I just want to put my cards on the table here at outset. When it comes to transparency of beneficial ownership, I am an absolutist. I don't like halfway houses of obliged entities and all the rest of it. I understand what's going on in the EU at the moment, but I think there should be no negotiation about this. And I base it on one fairly simple reason, which is that nobody ever in the history of the world was obliged to create a limited liability company. People do that because they want to. And they get significant benefits from doing that because there's a clue in the name. It's a limited liability company. That means they limit their exposure to debts. And also almost universally, these companies get some significant tax advantages, which is relevant today. Now, if you choose to have a limited liability company with those benefits, I don't think it's unfair for society to say the quid pro quo for that choice is that you may not have secrecy around your ownership. Because at the moment, it seems to me it's kind of win-win-win for the people creating the companies and lose-lose-lose for society, who are always going to be the one picking up the bill for the companies that go bust or who use these companies to cheat their tax or whatever. It is, you know, there has to be some give and take here. And at the moment, it seems to be it's pretty much all take and very little give. Now, one of the potential exemptions from that, of course, is here in the UK, where we have a allegedly fully transparent business register, Companies House. Now, nobody who's been on the planet for the last 5 years will not be aware of the fact that Companies House is riddled with all sorts of issues, and which is why there is currently an economic crime and corporate transparency bill going through Parliament to try and rectify those. And it is, I mean, the fact is that if you want to circumvent the rules around, we have this special name, this person with significant control, which is to all intents and purposes a beneficial owner. And there are loads of ways of getting around it, the most simple of which is just saying, we haven't got one. And, oh, okay, fine. And Companies House will happily put on the register, no PSC. And then you look at the incorporation document and you find a single person has all the shares. Well, hold on. Logically, those two things cannot be true. You can't own all the shares in the company and then say we haven't got a PSC. So there are lots of ways of circumventing the rules. But and I really want to make the point that even though Companies House is kind of a flawed entity, it doesn't mean it's useless. And that's really important. And I want to focus on the tax side of things. Normally, mostly what I talk about is crime and corruption, but actually tax comes into this as well. Some of you here in the UK may have seen a story a little while ago about a poor chap down in Cardiff who in the space of a few months received 11,000 letters from HMRC because a whole bunch of Chinese companies had decided to use his address to register for VAT. They had nothing whatever to do with this. But there are no checks on whose address you use to register for VAT. And he suddenly started, he was getting 600 letters a day. Now actually it came about, I'm going to show off here, it came about because I did some work with BBC Wales on Chinese companies incorporated in Wales. And as a result of that programme, he got in touch and said, well, if you think that's bad, you should see what I'm having to deal with. And it was worse. So that kind of piqued my interest. And I thought, well, that's fascinating. And what was very clear is that a lot of these companies were trading on Amazon as third-party resellers. And I should say at this point, other third-party resellers are available. I'm going to talk about Amazon, but this is not just an Amazon problem. So I got to having a look at third-party resellers on Amazon. And there are, and I mean, most of you may well know that a huge majority of what's sold on Amazon comes out of China. And there are two ways of doing this. One is that you can be registered in China and then simply register for VAT in the UK, and in which case Amazon tends to be responsible for collecting that VAT. Or you can incorporate in the UK and then you become responsible for your own VAT collections. So I started digging. And what I found was frankly scary, but also a vindication of having open beneficial ownership registers. Because what I found easily were that there's a huge number of companies trading on Amazon, which are UK registered, which have either been struck off the register and no longer have a VAT registration even though both of those things are still listed on their Amazon corporate entry. Or they are on the register and they are registered for VAT, but they consistently file dormant accounts. Now, I found one, I'm not going to bore you with all the details, but I found one that has had in its life thousands and thousands of reviews. I mean, thousands. Now, I don't know how often people here file reviews, but I suspect not that often. So for every review, there's probably at least 10 purchases. So this is a company that's doing probably tens of thousands of products a year. And yet it's filed dormant accounts every year of its existence and has done so the last time in May of this year. So it's still filing dormant accounts, even though it's trading through its UK entity. Now that's a kind of, it's almost like a triple whammy, because it's probably not paying the VAT. It is certainly apparently not paying tax because it's filing dormant accounts. And it's doing it through Amazon, who themselves, not illegally, I'm going to be very clear about this, but who cleverly themselves have virtually no tax bill in the UK. And that's a problem, because we have this platform which is hugely successful, which is selling billions of pounds of goods a year. And yet apparently huge amounts of that money, either legally or illegally, is not going to the exchequer. That presents us with a real problem as a country, because all those people working for Amazon need to be educated, kept healthy, have transport, have roads, all of which are paid for through taxpayers' money. And if their employer is either themselves managing to avoid paying huge amounts of tax or providing a platform for others who are illegally not paying tax, that money has been taken out of our economy and isn't there to produce the healthy, well-educated people who will follow in their footsteps. So just to round up, this is not just a theoretical, oh yes, beneficial ownership, very, very good, all the rest of it. It is actually fundamental to our ability to manage our economies, to expose those who would cheat our economies and allow connections between different types of database, HMRC, the VAT register, Companies House and Amazon, to connect those dots and to do it in a way that shows wrongdoing. And it can't just be for, you know, obliged entities, because they don't have the time, the resources, or frankly, the motivation to do that stuff. And sadly, I do. But that is my best use case for having a free to access, fully open, beneficial ownership register. And Peter, at that point, I will hand back to you.
Thank you very much, Graham. Very well put, and some really good case studies there as well. And you did get a question in the Q&A about your research and its accessibility, so I'll probably come back to you at the end to give some more information on that. At this moment, I'd like to bring on our next panelist, Timon Keeper, who is Head of Policy and Research at Open Ownership. Timon leads their research agenda to develop, test and refine their tools and recommendations, whilst crucially supporting governments as they implement their beneficial ownership transparency registers too. Timon, it would be absolutely fantastic to hear a bit more about open ownership's unique role in the space and the situation from your perspective.
Great, thank you, Peter. Just checking that everyone can see the slide and can hear me fine.
Yes, I can see it, so hopefully others should.
Great, thank you very much. Yes, I'll begin very quickly with a quick intro to our work. So Open Ownership is a non-profit, non-governmental organization that focuses exclusively on beneficial ownership transparency. And in using those words, we mean the upfront disclosure of ownership and control to governments. And it was set up in the wake of the 2016 London Anti-Corruption Conference and the Panama Papers leaks. And we aim to strengthen accountability and transparency in the ownership and control of corporate vehicles through three main areas of work. So one, as Peter mentioned, is providing direct technical assistance to governments implementing reforms, and we have done and are doing so with over 40 governments. Two is by the policy and research work, which I lead. There we look at the emerging best practice of implementing the reforms, learning from and applying this to our technical assistance work to create useful and usable data. And three is the technology and data use work. This has involved the development of the beneficial ownership data standard. This is a standard endorsed by the UK government, implemented by a number of countries, including Nigeria, which launched its register a few weeks ago, and Canada. So we provide end-to-end support to countries. So from commitments to drafting legislation, developing the systems and business processes, and then to sharing that information with various actors such as governments, business, civil society, who use the information to achieve specific objectives. And in terms of the objectives, we often see jurisdictions implementing reforms to comply with international anti-money laundering standards, mostly set by the Financial Action Task Force. But the information can be used to meet a range of policy aims, far broader than just tackling money laundering. Not to go into all of them, these can broadly be summarized into having fair and open markets, supporting effective government, and tackling illicit activities. So for our purposes today, it can support effective taxation in a number of ways. So I'll get into a few more details in a second. But on the tackling illicit activity side, it can also make it harder for criminals to move and hide the proceeds of crimes, including tax crimes, helping criminal investigations and helping track and recover stolen assets. My organization tries to ensure that the reforms are implemented effectively to produce, as I said, useful and usable data for the widest range of possible users and for the widest range of possible policy objectives. So I won't go into the details, you don't need to read everything, but this is a snapshot of our policy framework for effective implementation. So it includes everything from having a good definition of beneficial ownership in law to ensuring that there are sanctions on non-compliance, that these are enforced. The UK does a number of these things very well, such as structuring its data and making this very widely accessible. Infamously, it does a number of things less well, such as verifying the accuracy of the information, although this may soon change. And what does this mean in practical terms? It means not having something like we see on the left, which is a form that's scanned and then downloadable as a PDF, but having something more like what's on the right. So these screenshots are actually a before and after from the Armenian register, and the visual of the corporate structure on the right is actually automatically generated from the underlying structured data. So this is what we're talking about when we're talking about usable and useful data. So a very quick snapshot. This is slightly out of date, but this is broadly where we are now in terms of commitments to beneficial ownership transparency. And you can see the majority of countries has committed to public access to that information. But this is more or less where we are with regards to implementation. So there's a lot more work to be done, but that also presents a key window of opportunity to ensure that countries implement high quality reforms. And why implementation abroad matters to the UK, I think, is the fact that many corporate structures are transnational in nature. So when all countries implement the reforms to a certain standard, we can get a better visibility of all these transnational corporate structures. So bringing us briefly back to the subject of tax, I think it's worth remembering that the term beneficial ownership actually has its origins in tax law and became popular as a concept to prevent people from treaty shopping or the claiming of false benefits under bilateral tax treaties. And over the years, the term has been adopted into the anti-money laundering policy toolkit with the growing awareness of the use of corporate vehicles to hide and launder the proceeds of crime. And this list of crimes has steadily and is ever increasing, it seems, but has included tax crimes from pretty much the very beginning. And over the years, the various definitions of beneficial ownership in both tax and anti-money laundering have converged. So the use of this information in tax is nothing new. At the same time that the central register started being launched around 2015, many of the world's tax agencies started automatically exchanging information on tax, including beneficial ownership information, according to the Common Reporting Standard from the OECD. So this is information collected by banks, automatically disclosed to tax authorities, and then exchanged between tax authorities in different countries. So then you might wonder, so if tax authorities already have access to beneficial ownership information, why do we need central registers for tax purposes? And why do these need to be made publicly available? So firstly, not all corporate vehicles are in scope of the CRS. And in addition, the quality highly depends on how it's collected and managed by the banks. So there's the operating assumption that compliance with mandatory disclosure to governments will lead to higher quality information. And finally, so an increasing number of countries are requiring financial institutions to report discrepancies between the outcomes of their customer due diligence processes and the information held on central registers. So we're edging towards the consolidation of all these sort of different sources of beneficial ownership information. So in terms of its use, so beneficial ownership information can be used for fair taxation in a number of ways. So I was talking to the Nigerian Mining Cadastre Office last week. They manage all the licenses and concessions for mining in the country. And license holders are required to pay annual taxes, but a common problem they were facing is that companies would vanish before paying these, and then the owners would simply incorporate a new company under a different name and apply to a new license. So they've started using beneficial ownership information from their central register. They can now more easily identify these situations, which they say has caused a significant increase in their tax revenue collection. As shown in the graph, that's I think up to date as of November last year. Secondly, can help determine tax liabilities. So someone might want to disguise their ownership of a company to distance themselves from the proceeds of crime, but someone may also want to hide their ownership of an asset because the asset in question might be liable to taxation. So with this information, tax authorities can better establish which taxable assets are owned by individuals and companies. The third, already discussed, but still relevant today. So preventing treaty shopping using shell companies. This is a key part of the base erosion and profit shifting plan to ensure that tax treaties are not abused by multinationals. Another use case is countering VAT fraud, which costs states billions of pounds each year. So Graham mentioned a specific case. Another common form is missing trader or VAT carousel fraud, which involves setting up a number of companies, these companies selling goods to each other, and basically one of the companies pocketing the VAT and all disappearing. And the Danish Beneficial Ownership Register has, in collaboration with the tax agency, developed a fraud risk model that flags which companies are at higher risk of engaging in this type of fraud. On wealth tax, so in 2020, the UK Wealth Tax Commission used the UK PSC data to measure the taxable top wealth in the UK. And then finally, I think they speak for themselves, but helping financial investigative units detect and investigate tax crimes, as well as helping authorities monitor and enforce the automatic exchange of information between banks and different tax authorities. But I want to end with a few of the remaining issues. So first, as already flagged, is the need to balance privacy and transparency. As Peter mentioned, particularly live debate since the EU Court of Justice ruling in November 2022. I think for us here discussing tax, it's important to bear in mind that the judgment was strictly about fighting financial crime. And as I've hopefully made clear, there are many more purposes to collecting and publishing beneficial ownership information, which might make it more reasonable or justified to make this information public. Nevertheless, I do think it's important to bear in mind that beneficial ownership data is personal data and should be considered in line with privacy and data protection legislation. So many countries, including the UK, they put certain mitigating measures in place to mitigate the privacy interference. In any case, I think public access is the most effective way to enable the use that helps different users achieve certain policy goals actually happens. In the example of the Danish tax authority I just mentioned, they use a tool developed by a private company. So without public access to information, this company would not have been able to develop the tools that is used by the tax authority. So maybe in a utopian future world of perfect governments, we might not need public information, but we're sadly not there yet. And while tax collection is the purview of the authorities, I think we see time and time again the role that civil society have to play in the oversight and holding authorities to account. I think Graham Barrow is a living example of this. Finally, I think a point on trusts and other legal arrangements, like on the whole, governments are unfortunately not applying the same registration and disclosure requirements to trusts and other legal arrangements as they are to companies and legal entities. And I think this is still a major blind spot for transparency and for fair taxation. And with that, I would like to hand it back to the chair. Thank you.
Thank you so much, Timon. A really comprehensive overview of the global picture with beneficial ownership, and specifically noting what you say about trusts and things like that. You know, with the current bill that's going through Parliament, the Economic Crime and Corporate Transparency Bill, hopefully we may see some movement on there within the coming weeks and months, but still all to be seen. I'd just like to say a reminder that people can use the Q&A box, put in questions for our panelists. We have some space at the end to do a bit of Q&A. But before that, I would like to introduce our final panelist, Fair Tax Foundation's own Mary Patel. As network manager, Mary develops broader networks and coalitions to encourage fair tax practices, including the UK Fair Tax Council's initiative and our very own Fair Tax Week. She supports related policy work on public procurement and corporate transparency too. Mary, we've heard a lot about the importance of beneficial ownership from one panelists, mostly about dirty money and kleptocrats, and Timon mentioned the tax just then as well. It would be great to hear from you on this and Fair Tax Foundation's perspectives.
Thanks so much, Peter, and it really is my pleasure to follow such a great series of speeches that have made such a great case for beneficial ownership transparency. Just briefly before I get started, a quick introduction to the Fair Tax Foundation. So we launched back in 2014. We're a social enterprise, and we believe that businesses that pay their taxes responsibly should be recognised and celebrated. And we want really to counter any global race to the bottom on tax competition as well. And we see that progress around the issue of tax justice and the related issue of corporate transparency that we're talking about today needs voluntary excellence from business, as well as more evolved legislation and regulation. Our Fair Tax Smart businesses run into some 100 parent companies covering 250 distinct trading businesses, everything from small enterprises through to multinationals, and we can accredit businesses wherever in the world they're based. Our Fair Tax Smart businesses employ over 250,000 people and collectively contribute more than £1 billion of corporation tax annually. So they're progressive businesses, follow the spirit as well of the letter of the law, shun tax avoidance and artificial use of tax havens. And crucially for today, they're also transparent about who owns them, about the taxes they pay, where they pay them and why. And we also have a network of almost 50 fair tax councils and, as you say, run Fair Tax Week. So today I want to make the case for why beneficial ownership transparency is a really, really good thing for addressing poor tax conduct. So we know that corporate secrecy offers a cover for all sorts of bad practice. So I think it just goes that transparency measures that are designed to tackle corruption and money laundering often work for tax dodging too. And I think like Roland and like Graham, I just wanted to share a couple of stories that I hope illustrate how corporate secrecy has stood in the way of fair tax here in the UK. So we've already had the Panama Papers mentioned. I'm going to go back to those. One of the stories that broke here in the UK on the back of that massive 2016 leak from the Panamanian law firm Mossack Fonseca was about ex-Prime Minister David Cameron's late father, who used the law firm, so used Mossack Fonseca services to shield his investment fund from UK taxes. And no, I'm not suggesting there's anything illegal going on there. The fund registered in Panama, even though many of its key investors were British, and obscured its true ownership using untraceable certificates known as bearer shares, and by using employee nominee company officers based in another financial secrecy jurisdiction, the Bahamas. And although I should say, to be fair to David Cameron himself, he did lead a very big push for tax haven reform. And then the second story I wanted to share is more local to us here in the UK. If you walk down the famous shopping district of Oxford Street, you'll see that like many of the big famous retailers that where they've been replaced by a real explosion of US style candy stores. It really is kind of something to behold. And the local council there, the local authority there is Westminster City Council. They're one of our fair tax councils, and they've been trying to reclaim around £9 million worth of local business rate tax evasion from these stores. And and in trying to trace the owners and recover the taxes that are due, the officers, the local authority employees have found themselves hitting a bit of a brick wall in secrecy jurisdictions like the Cayman Islands. So, without knowing a true ownership behind an asset, behind a company, it becomes much, much more difficult to spot, let alone stop these kind of aggressive practices. So I mean, for us, having access to beneficial ownership data that is both correct and transparent means that stakeholders can see who is actually behind the operation, where the money's flowing to, and for us, the taxes that should be due on that income. And I think quite a few people have mentioned today that compliance is not just left solely in the hands of often, really stretched national authorities. Right from the start, our fair tax mark standards for businesses have had a requirement for beneficial ownership transparency baked in, as has our UK Fair Tax Council's initiative. And so we required beneficial ownership disclosure before it was legislated for here in the UK, and at levels much lower than now required by law. And so we see that, our financial transparency standards are giving stakeholders confidence that, a business has got nothing to hide. I just wanted to delve really briefly, if I can, into our transparency requirements. We look at ownership right from the start of engaging with a business wanting to go for fair tax mark accreditation. And on the line today, we've got our head of accreditation, Jamie Boswell, who's going to join us for the Q&A in case you've got any really technical questions. So unlike some accreditation schemes, we won't accredit a subsidiary. We have to look at the whole group. And before we engage with a business, we need to know who the ultimate parent entity is, and then we'll look at the natural persons behind it. So we'll look at ownership, who owns the shares, the business, its assets, in what capacity, control, who is it that has voting power, all the say, who determines how much, who gets the money, and beneficiaries, those who actually receive the money from the success of the business. So we do take a really detailed look at beneficial ownership of all the businesses that we're working with, because we know that sometimes people that control a business may not be the same people that benefit, and the people that own the business, the assets and its liabilities may be different people again. So all of those might be beneficial ownership owners in our eyes. And we've touched on the UK's register, which was pioneering. And we find that, obviously public access to this is really good, unless, again, people have mentioned, unless the owner is a trust, but the quality of the data is really quite poor. We know that it's essentially a filing system. It depends on the accuracy and the honesty of the person making the declarations. Elsewhere in the world, if we're looking at companies owned overseas, obviously it can be a lot more difficult to find out, sometimes impossible. And we've heard from Roland about how access to some EU country registers have become harder after last year's European Court ruling. And all of these international mismatches really are gamed by the unethical, by the corrupt, and they are an obstacle for tax authorities and the like. Thinking about the UK here, I can't not point out that the UK's pioneering register sits in really uneasy contrast to the secrecy that's provided by the UK's overseas territories and by its crown dependencies. I think looking at research by our friends at the Tax Justice Network shows that collectively these British overseas secrecy hubs, together with the UK, are the world's biggest tax evasion enabler, and responsible for costing the rest of the world a whacking $87.9 billion worth of lost tax a year, or something around that figure. And on those overseas territories, open registers have been promised, but they are really still far from being realised. Okay, just to wrap things up, I wanted to touch briefly on legislative change here in the UK. Change to tackle and there really has been staggering abuse of the UK's corporate registration service. We've heard just one story there from Graham, and I know he's got lots more. And reform of this has been long overdue. The terrible war in Ukraine and the UK's exposure to Russian dirty money really kind of finally forced the government to act. We've had welcome proposals come through in both the first and now the second economic crime bill going through Parliament. We're really pleased to see companies' house registration fee go up from 12 to, we hope, at least £50, and allowing additional powers so that companies' house can actually verify information registered, such as persons of significant control. And we've also been really pleased, in light of the EU ruling, that government has reconfirmed commitment to supporting the introduction of public registers of beneficial ownership in the overseas territories. And it would be a landmark development given the scale of tax abuse that's enabled by them, but it's really still far from a done deal, and we really do have to keep the pressure up. Still much more to do to close other loopholes, resource our enforcement bodies, supervise providers that offer registration services to companies. And I think, you know, obviously we will continue to work alongside all our wonderful allies in the UK Anti-Corruption Coalition and beyond, you know, to make this case, this vital case for progressive reform, and to be out there celebrating responsible businesses that back financial transparency. That's me all done, Peter. I'll hand back over to you. Thank you.
Yeah, as chair, I can't really top that. I thought that was a fantastic reflection on the situation, pulled in so many different elements of beneficial ownership, and really important to touch on the legislative aspect as well. It's now our opportunity to go to a Q&A. I will try and get a question to everyone, but you know, apologies in advance to the panel if I don't get to you, unfortunately. Graham, I would like to come to you first, if that's possible. We had a question in the chat about your research on the case study that you mentioned, and whether it's accessible, has been published yet. So it'd be great to just hear from you about how people can access your information. So that's part one of my question. And then part two, Graham, is that Mary touched on the you know, the quality of the register for Companies House, the data that we get, and also touched on the legislation that's going through that is, you know, attempting to add a bit more verification to this, you know, a bit more solid, you know, making the register a bit more comprehensive and more verified. Could you please give a bit of perspective on, you know, how you think the Companies House reform changes are going, and what you want to see from the government going forward?
Yeah, so firstly, I've just posted a link into the Q&A with a specific article I wrote about that case study on Amazon. The scale of the thing is way, way, way bigger, and anyone who's seen me talk recently will know just how big a scale it is, outside of the scope of today, but it is frankly eye-watering, and I think it runs to millions of pounds of lost revenue. Which is a good introduction to the next bit. Reform of Companies House. Well, at the moment it is dreadful. Most days 3,000 to 3,500 companies are registered at Companies House. None of them have any verification or validation whatsoever. Probably about 20% of them are just complete garbage. Anyone who follows me on LinkedIn, and anyone who's not following me, please feel free to do so, because you will see the scale of the problem. It is massive. Will the changes help? Yes, of course they will, because they will at least bring in some level. I mean, at least we put people through the same process that you need to go through to go and get a library ticket from your local authority to borrow books, you know, which has been for 20 years. You have to actually prove who you are. Is it going to be a silver bullet? No, absolutely not. I mean, I work with lots of banks to help them identify suspicious entities, and it's absolutely clear that with their far more stringent onboarding processes, selfies, proof of life, all the rest of it, they still onboard criminal entities, and sadly quite prodigious quantities of them. So if they can get through the bank's procedures, they can certainly get through Companies House, but it will add traction. And the other thing is, if we increase the fee, I mean, it costs you £55 to register a new car, which, you know, I mean, it can do some damage, but actually economically, a new company can do far more damage, and it's £12. That's crazy. I mean, if you're serious about starting your new venture, £100 is not an impediment. Neither is it to criminals, but that's not the point. The point is it generates sufficient revenue to then fund proper research, validation, verification of companies to try and stop this from happening. So, you know, we still have a way to go. We're currently stuck in the House of Lords in committee, which is actually brilliant because they go through it line by line, and there's been some huge amendments. I had a very brief conversation with Lord Agnew the other day, which is encouraging because he really is keen to make sure the legislation is effective, and it will help, but it's a first step, and it's not a destination in any way, but we're moving in the right direction.
Excellent. Thank you so much, Graham. I may have a follow-up for you towards the end as well. Roland, I'd like to come to you, if that's okay, and just ask a quick question about the new directive coming from the EU. I know you touched on it a little bit during your talk, but it'd be great to hear more just about the new directive with regards to beneficial ownership and where you see the EU going now. So yes, the rulings happened. You mentioned it was a bad ruling at a good time. There is a new directive in play. What does this mean for public beneficial ownership going forward in the EU now?
Thank you very much. And it was a very interesting discussion, and thank you for really the other panelists. It was really interesting to hear your perspective as well. So as I mentioned, there is this long ongoing negotiations, which will maybe by the end of the year, hopefully will end. And then the member states will have a transposition period. So when we talk about a new directive, it means that in essence, in practice, maybe around mid-2027, we will see how this plays out and works out. And this is, of course, a problem because also the lack of, let's say, any clear messaging from the European Commission, so the executive branch of the EU, of what to do now is really a problem because now member states do whatever they want and however they feel. But let's just answer your question on what do I want to see by mid-2027 when this directive will be in place and it will be transposed. A good register in all 27 member states where their information is being verified. And I just, echo what Graham said, that really there is a serious problem in also in the all EU member states about that. And this really has to be addressed. And of course, one is the actual resources of those registers and, what is happening if there is discrepancies. We hope that there would be more power for the registers, for the registrar to do something about that. And of course, the access, as I mentioned, hopefully at least those who have legitimate interest, they can get access to that. And I will come back in a minute on that. As well, this new directive also touches upon the real estate registers, because you might be surprised in some EU member states, there is no digital information on real estate ownership anywhere. So in Germany, in some places, it's really just on paper printed out somewhere, which is a joke, I think, in this time of the 21st century. So hopefully it will be real estate registered with beneficial ownership information and also asset registries. That's an ongoing battle because you might not be surprised. The member states don't want to have too many obligations. The European Parliament is more progressive on that. They really want at least some kind of asset registry for cars, vessels, planes, and so on, with beneficial ownership information, which is clearly far away from what we want. But at this stage, at least, I think it would be a big win if we would have something in this register. And one last point I want to mention about this new directive, what we might want to see is more of the question of who is guarding the guards. I mean, it's great that many obliged entities are doing a good job, but what if they don't? So I think the really question of supervision should be strengthened in this directive, and hopefully we will see that in the upcoming years. And I just want to add one more thing regarding the access to beneficial ownership. And it was mentioned by the other panelists that indeed it was this whole ACJ ruling was in context of the objective of this anti-money laundering. So as we discussed, there are many other reasons and objectives why this matters. Maybe for a company perspective, maybe for any other perspective why this information should be accessible. I want to manage expectations. Unfortunately, tax is a bit problematic question because in the EU, every tax decision is based on unanimity. So all 27 member states need to agree. And you might have seen the long delay with the OECD, Pillar 2, and many other problems. So if the EU will one day, which we really hope, will go again back towards more of the general public access on about beneficial ownership, it is probably not going to be through any kind of tax avenues because, as I mentioned, it would require all 27 member states agree on that, which will just not going to happen. So we will see what other avenues we have, and let's hope this directive will deliver at least on many other fronts.
Thank you so much, Roland. There's a question in the chat for our fair tax panelists. I'm not sure how you want to divide this up between yourselves. Does the fair tax mark process look at and consider party transactions as well as beneficial ownership?
I think I can just start by saying yes, and then handing over to my colleague Jamie for a bit of the detail on how this works. If that's all right, Jamie.
Yeah, that's fine. That's fine. Yes, we do look at related party transactions. And to be fair, this is an area when we assess businesses, there's a big difference in our approach and how we assess depending on the size. And this is a risk area for the smaller companies more than the bigger ones, because the bigger businesses tend to be so big that they produce consolidated accounts and they have to disclose their related party transactions with, say, like the directors or any other connected companies that they don't control or that aren't consolidated in those results that we're looking at. But with the smaller companies at the minute, until the economic crime bill finalizes and goes through, all they've got to do really is publish a balance sheet detailing some assets and some cash at the bank. They don't really have to say how much income or profits or taxes that they're paying. They don't really have to say details on any other sister companies. So the sister companies are, say, you've got a director who might own 3 or 4 or 5 different companies, and you could say that in effect they're part of the same group because they're owned by the same individual, but because they're so small, they're all presented separately. They're not part of a group. And so we could basically assess a company that could be an angel of a company, but its 4 other sister companies are being wrapped up, wound up, not paying any taxes, etc. So we do look at related party transactions, and we do look at, the directors' other interests as well and their transactions between them all, because we have to make sure that we look at the complete picture. Like Mary said earlier, we don't, accredit just a subsidiary on its own. We have to assess the whole situation. So the directors, their owners, the transactions between all the different types of companies, their history, the group, etc. So that's a long-winded way of saying, yes, we do look at related party transactions, yes.
Thank you, Jamie. We're heading towards the end now, but Timon, I'm going to squeeze in a quick question for you before I do a quick wrap up. And Roland talked about the EU itself and the effect that obviously the ruling has had on that jurisdiction. There were mentions of, and you presented the global picture, there were mentions of other jurisdictions too from the panelists. I'd like to just ask you if you can note any effect that the ruling has had on other jurisdictions and their maybe implementation of public beneficial ownership.
Yeah, I think the most we get is just questions from governments asking what the effect is on them. I think we also work with the UK overseas territories that are all under a draft order in council from the UK government, required to have their public beneficial ownership registers up and running by the end of this year. That's probably definitely not going to happen by the end of this year. I think all of them, or many of them, that's probably not fair to say, all have sort of latched onto this as a way to drag their heels a bit. But I think it's worth noting that especially on the African continent, a number of countries in Asia, Canada, Australia, they're all committed to public access. And while they're still in the process of implementing the reforms and setting up the systems, so it'll be maybe a year or two before things are online. There's definitely still a strong, I would say, momentum for public, more so than non-public access.
Yeah, and to end on a really positive note as well, a lot of uncertainty came from the ruling, but it was good to see the UK government, in our own jurisdiction, come out really strongly to say that, we're a leading player in public beneficial ownership. That's not going to change, and we're going to continue to campaign for it. So ending on that positive note. I'd like to thank all our panelists for their contributions, not just today, but for their broader work on illicit finance and the campaign for public beneficial ownership as well. I'd just like to close as well by noting that more events will be taking place in Fair Tax Week, including tomorrow at 12, Tax Justice Perspectives Across Europe. And it's been put in the chat a few times, but please head to Fair Tax Week webpage for more information and to register. And with that, I would like to thank everyone and enjoy the rest of your day.
Thank you.
Thank you.
Thanks, everyone.